JoAnne Bianco, partner and senior investment strategist at BondBloxx. Your firm recently published its 2026 Fixed Income Market Outlook, which touches on emerging markets, credit, and U.S. Treasuries, among other things. Can you give us the highlights of the findings from that report?
Sure, Chris, thanks very much, first of all, for having me on your show. And what we're thinking for 2026 is that we expect fixed income to continue to play essential roles in investor portfolios. And so the macroeconomic backdrop that we see is we still think the US economy remains resilient next year. We think economic growth will be comfortably positive. We're expecting GDP growth in the 1.5% to 2% range. So that's really all the bond market needs, or fixed companies that issue debt in fixed income need to be comfortable in terms of their credit worthiness. So it's a supportive of credit fundamentals in corporate credit in fixed income. We think that inflation measures, that's going to be definitely the area to watch. We want to, see that there isn't like a re-acceleration in inflation. There's definitely been, um, sticky inflation, stickier than I think the market anticipated, that partially because of tariffs, just partially because, there's a lot of factors going into that. The Federal Reserve, we think, is going to proceed cautiously with regard to future rate cuts. They've slated in their dot projections, they're only really looking on average to maybe having one rate cut next year. We'll see. Time will tell. The Fed is definitely going to change in terms of its complexion with a new Fed chair. There's probably going to be more independence in terms of the way the committee members vote. All of those things could have impacts on Fed policy and monetary policy. And so then really one of the final things that we're going to be watching very closely is the health of the US labor markets and consumer spending. If we continue if there is more deterioration in labor markets, we could see more rate cuts. But on the other hand, if we don't see that, if it stabilizes, if consumer spending holds up, that's something that would be good for the fixed income markets. And then in terms of like how we think this translates into what our top recommendations are, we still really like the corporate credit markets, both investment grade and high yield, public and private credit. We think that there's still really supportive fundamentals. There's, corporations are showing from the triple B category all the way down to the triple C category that they're focusing on managing their debt maturities and refinancing, and it's not a real aggressive or speculative type of debt issuance that we're seeing, and they're managing their balance sheet. So all those things to us mean that you should look to the kind of extra income that you can get from corporate credit investments.
Thank you. And can you tell us about BondBloxx as a firm, including its range of products and services?
Sure. BondBloxx was founded by a group of industry veterans at some of the largest ETF names out there, and the group came together to provide exposures on the fixed income side, like investors have traditionally only seen on the equity side in terms of precision and choice. And so that is, the primary reason. That's our primary mission, is providing more precision exposures in fixed income. And towards that end, to date, now we have like 27 funds that we have launched in the last 4 years, and they're across US Treasuries, investment grade corporates, high yield corporates, emerging markets, private credit, tax aware, so and more to come. And so all of them are unique exposures that you won't find other ways, that investors use either individually or in combination to be able to express their views.
JoAnne, I learned a lot. I think a lot of people have. Thank you very much for your time.
Thank you.